The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the, what is today? It's a wonderful Wednesday edition. That much I know. So welcome to the May 14th wonderful Wednesday edition of The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. Hope everybody out there had a terrific Tuesday out there. Let's get our day started off by what? By having clear outcomes. You know, my outcome each day, it's to teach you how to master the tools for trading, and that includes the tools of the mind, because when we master our mind, folks, we become a strategist. So this morning, you'll hear me use technical tools like A to B equals CD. In order to use those, we need to be able to identify swing points, major intersections where we identify changes in trends in the marketplace. So we'll use those to identify Gartley buy or sell patterns. We'll use those to identify butterfly patterns. We'll use some other things. And all of those, they're just simply tactics. And tactics are important. But tactics without strategy, well, that's a recipe for failure, and failure is not an option in my book. So no matter what it is you are trying to attain in life, folks, what I want you to do is I want you to think like a strategist, because strategists, they will slay the tactician all day long. So let's go look at one of our tools to help us think like a strategist. This is a tool I call where there is no vision, there is no direction. Something to think about. So if you and I, if we don't have a specific outcome in mind, or if we don't know where we want to go, we may very likely end up in places not of our choosing. Have you ever done that when it comes to trading and investing? Well, look, as we begin Wonderful Wednesday, what is your specific outcome for the day? What is it for the week? What is it for next month? And the question is it written down? Or is at least, have you put it into your memo pad? You see, you want to write it down, and what you want to have is strong reasons. See, without strong reasons why, without some type of strong purpose, well, it is like driving your car around with that empty light flashing, you know, the one on your gas tank out there, and you're likely going to run out of gas before you achieve your outcome. Henry Ford, he used the art of visualization. He pictured in his mind the type of automobile he wanted to build at a price most people could afford. He created a mental blueprint of his dream car before it was even put to paper. He pictured great numbers of people buying and driving his car. It became only a matter of time before Ford's vision, became reality. As many of you know, though, Ford, he failed. He failed several times. He went broke 5 times before his vision became reality. Now, do you think Henry Ford had strong reasons why he wanted to attain that vision? He absolutely did, folks. All we need to do is just learn from the other masters out there. I want you to envision your outcomes. I want you to have strong reasons why, and I want you to never give up, because when you rule your mind, you will rule your world. Folks, it is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here right now. Relatively flat markets out here. Well, the Dow is off 6 points. It's trading out at 16,668. Futures-wise, S&P down 2.5 points. It's trading out at 1891. NASDAQ futures off 10. They're trading out at 35.98. King dollar back 6 pennies right now. It's trading out at $80.15. Goldilocks on fire. Fire is a key word here this morning, but it is on fire. It's up $10. It's trading out at $13.05. Silver's up 27 pennies right now, up 1 4/10%. It's trading out at $19.82. Light sweet crude up 38 cents. It's trading out at $102.11 out there. Our call-in number is 877-927-6648. We'd love to hear from you. Field your calls, answer whatever question I possibly can. If we take a look around the globe out here, flat markets over in Europe right now. The DAX is off 1 point. The FTSE is down 9. In Asia last night, the Nikkei was off 19 points. That's a flat market. The Hang Seng, not a flat market. She was up 231 points, a little over 1%. The Shanghai off 3. So, you know, it's really up to the U.S. to establish what it wants to do today. So where do we begin our day? Let's begin our day. Where do we begin our day? Let's take a look at the Russell 2000, the TF, the Russell 2000 futures contract. And here's what we know thus far. What the Russell 2000 did on May the 12th, that was on Monday, broke through the rising price channel. Now, it had broken through the rising price channel once before. That was on the trading session of April 2nd out there. Broke through it. Very next session came back inside that rising price channel. Now, the day that it broke back inside there, it did give you a bearish signal. It gave you a key reversal pattern, gave you a bearish engulfing, gave you all 9 yards. And then what price proceeded to do was to move all the way back down to the bottom of the rising price channel. It also went ahead and was testing a swing point, the one back from February the 5th. That was the high of that level was 1096.70. So the bottom, that test that came on April 15th, both tested a horizontal level of potential support, which it turned out to be, as well as the bottom of the descending price channel out here. So what happened now yesterday? Well, yesterday, price did what it was supposed to do. So if we take a look at it, if you were looking at just simple retracements, in this case here, we're looking at the retracement high inside of the Russell 2000. I'm using the March 7th high out here. Let me see, that's 12.1270. It's really, 12.1270. That is the high. Good. So I'm using the right high out there. March 7th high, 12.1270. And if you use your retracement rule, and you go from that high down to the low that came in here on Friday. That's out at a price point of 1087.10 out there. What the Russell 2000 did, they did that dead cat bounce, did that 0.382 retracement. Now, and it did it with a nice wide-ranging bar and accelerated volume. It's a natural area, especially when you see an index here. You see a market that's been in a pretty drastic descending price channel out there, pretty large correction, making 100% move, all of those things. It's a logical area for price to for people to get off that elevator if they had played a bounce out there. Of course, if folks were short, it might have been an area for people to say, hey, I've got back our, not short, if they were long, an opportunity for them to get back a little bit of their cash. So what took place yesterday, we didn't get a bearish reversal signal, but we did get price move back down inside the descending price channel. What really needs to happen here today, maybe tomorrow, is price really needs to break through this area. So if we take a look at just a shorter term, that means coming from Friday's high or Friday's low to Monday's high out here, and we take a look at retracements. What we will see is that I'll blow this up on my screen out here. At the 11.17 area, we're trading at 11.15 right now. That happens to be, well, I've got a 10-minute delay, so don't forget that I've got a 10-minute delay on my chart out here. Basically, we're trading right around the 0.382 retracement of the shorter-term move up. Now, the logical thing, the most likely occurrence here is that we'd actually see price come back to the 11.05 area. At 11.05, it's your 0.618 retracement. It's one of Leonardo Fibonacci's numbers out there that we most want to pay attention to. And what's interesting about that 11.05 area is at 11.05, it really takes us right down to the low of Monday's breakout there, 11.0420. So I think our expectation here today, tomorrow, is that we would see the Russell 2000 pull back in that area. But what it needs to do, once it gets there, it really needs to start to make a beeline north. That could actually set up an A to B equals CD to the upside out here. That is one potential. We don't have a reversal signal like we did the last time that price was up at the descending price channel. Does that mean that price does not have to reverse and move all the way back down to the bottom? No. I'm just letting you know that candlestick-wise, the last two times up as price was trying to break through that rising price channel. In fact, you could go back, descending price channel. You could go back to the April 3rd time frame. That, too, was a key reversal session. So, and it's important for us to look at what? To look at strength. It's important for us to look at weakness. This is clearly weakness that is trying to break through, and we'll see if it can do it. So I think that's the parameters for today, is to move back into that 11.05-ish area. And that's what's going on inside of that chart. If we go take a look at strength you'd have to say is going to either be the S&P or it's going to be the Dow out here. In fact, so we ought to look at both, right? Let's go take a look at the Dow. What do we know about the Dow? Number one, what we know is that the Dow has broken through a 600-point consolidation. So it says, in its consolidating way, what it would really like to do is move up to about the 17,100 type range out there. Nice wide-ranging bar on Monday. As we've said, markets don't end on wide-ranging bars. Well, it didn't end. Yesterday was what? Little spinning top candle, just simply moved sideways. Now, the problem with yesterday's candles is the fact that, let's see, the high was 16,694. I don't know if we've been over that high. Now we've been at 16,694. That's close enough. The low of yesterday's candle, 16,652. So far this morning, we've been down to a low of 16,655. If you get to 16,651, let's just call it, you could have a potential key reversal session out there. It won't take much in order to create a bearish candle today, that's for sure. And the reason is this: very small-bodied candle yesterday. So it would really be the depth of any type of a pullback here. Now, if in fact price is going to pull back inside of the Dow futures, what it is that we would be looking for is we want to see how does price either handle the area of about 16,500 to the area here. We'll take a look at that key reversal session that took place on April 4th, and that high out there is 16,574. So it's how does price handle 16,574 to 16,500, and then does it take off from there? 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Really no change out here in the futures market. So inside the Dow out here, and I was saying that it is going to pull back out here. You know, markets don't end on wide-ranging bars like we saw there. But what we do want to be looking for, signals out here. And so today's candle is very important, with yesterday being kind of a stalling formation out here, just like the Russell 2000, which looks like it wants to pull back to the low of Monday's session out there. As one possibility, just a normal 0.618 retracement. Inside of the Dow, if we take a look at the Dow future, if I just come from the low out here that it established back on May 7th, to the high that was put in yesterday, what we'll see is the dead cat bounce, a 0.382 retracement that will take you down to about 16,545. That would take you into the resistance, old resistance, now support, which should be at the 16,574 type range. So it's that area. Of course, price could always come back and test the consolidation. What we want to see, if price does pull back to that level, you want to see price what that then sets up is that move to the 17,100 range. The other sign of strength out there really inside the market is the ES Mini. It itself has its own consolidation pattern. It's a 112-point consolidation level. Yesterday, it managed to also provide us with a small body candle. Now, no key reversal session as of yet, meaning that today's high is not taken out. Yesterday's high, when I say taken out, traded above yesterday's high is a more accurate statement. 1898.50 out there. Now, and we take a look at the daily chart. The reason why I really hesitate on a key reversal session, the market, it's not extended. But in one sense, we can say that it did go ahead and fulfill the obligation of a pattern. And that pattern, really a couple patterns out here, where we've got a nice little butterfly action, 1.272, expansion of the swing point from April 24th high. That's at 1882.50 down to the low that came in 2 trading sessions later down at the 1844 area. So, we'll pay attention to that as well. At this stage, the longer-term pattern suggests that what the ES Mini wants to do is make a move up into that 1957 level. Now, let's go take a look at Goldilocks and silver. You've got gold trading up $11 this morning. So let's go check in on both those hard currency pairs out here, see what kind of move they're making. Let's actually start with silver, because silver is a bit stronger here this morning than gold. What silver has not been able to do, and it is attempting to do it here today, and this is important at least in my playbook here, it's trying to reject the high of that June 28th area. And that's really important. That is a price point of 1963. Now look, just because it might close above that, does that mean that price can't come back in there? No. But it is a nice bullish signal to reject that area. So again, today, the key, and it tried the last couple of days, was not able to do it, could not find the energy. In fact, it is attempted to close above this level here for 3, 4, 5. Today would be, let's say, the 6th day. Not 6 days in a row, but 6 days over the past couple of weeks out here. And so the number to be watching inside of silver is 1963. If silver can do that, then your question is, well, where is it that silver could travel to? That's an excellent question. Number one, we always want to take a look at the prior swing points. So that's going to be, where our first eye should go to. And that's going to be really what I would do is I'd be focusing on the high of February 24th. And so from that high, let's go take a look at it inside silver. The high on February 24th came in at $22.18. I would go from that high down to the low that came in here on the trading session of May 1st. Now, what we'll see here, what's interesting, what's important, I just did this here as we were speaking live, so I hadn't done this. I hadn't checked out to see where silver might head to. But $20.02 happens to be the dead cat bounce, the 0.382 retracement. Much like we just we took a look at the retracement inside of the Russell 2000. It, too, thus far has made a 0.382 retracement. Now, the difference about the Russell versus this, Russell made it with a nice wide-ranging bar. That is not the case here in silver. So $20.02. So far, we've seen an intra-session high of $20 even Steven. If, in fact, you can get silver to close above $20, number one, we would be rejecting that June 28th swing point. Number two, you'd be above a 0.382 retracement level. That would be nice. That would be bullish, and that would say that what silver ought to do is make a run for $20.84. And how it hits that level, how it comes in there, the size of the bar and so forth, would help us, volume, would help us determine whether or not silver really wants to make a run for that swing point high somewhere around the $22.18 range. But so far, so good today, at the moment, at 9:30 a.m. We'll see what it looks like here this afternoon. Again, the key level to be watching for inside of high-ho silver, $19.63. We take a look at Goldilocks here real quickly. Gold also trying to break out, but it's got to get above its 200-day exponential moving average. That number, $13.2140. Another $15 or so. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say You can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 15 points, trading out of 16,700. S&P off a point and a half, down at 1896. Composite down 10, trading at 41.19. Russell 2000 off $3, trading out at 11.17. Apple off 11 pennies. Microsoft off 17. Google down a buck, leading the charge. The upside is Netflix up $2 and change, trading out at 3.49. Rubicon. RUBI, Rubicon Projects, that is up 21% out here. Now, Rubicon, let me take a look at this, a technology company providing advertising automation solutions out here. So they had a net loss of $6 million versus $2.2, so about a 300% increase there. Net revenues, though, growing. $23 million versus $16.6. Nonetheless, it is trading higher out here. We've got Western Digital, WDC, is the ticker symbol, up 2.5%, up $2. ISIS Pharmaceuticals, ISIS, up 7% this morning. Pernex Pharmaceuticals, PTX, that's up 37% out here. What do they do? Signed an agreement to acquire Treximet tablets for migraines. Now, I am fortunate to never have had a migraine in my entire life out there, so but I do know those that have, and that is a pretty nasty thing. In any event, to lead the charge to the downside out here, Fossil Group off $7, about $8 right now, down 7%. Let me see if Fossil came out with numbers out here. Looks like their first quarter net income was $66 million versus $72. Of course, we know that all the retailers struggled, at least in the Northeast, due to winter. However, Fossil Group did sales of $776 million versus $680. So they didn't have a problem with their first quarter. Nonetheless, they're getting hammered here this morning. We've got Enzy Motic. ENZY is the ticker symbol, down 24%. That's off about $5. Hydrogenics Corp, HYGS, that's down 22%. That's off $4. Green Mountain Coffee Roasters giving back some of yesterday's gains, down $2.50 right now. Amazon off $2. Zulily, ZU is a ticker symbol, down 8%, off a couple of dollars. Again, our call number is 877-927-6648. Let's go check out some of these stocks here that are popping and dropping this morning. Let's take a look at, let me see, was this a Rubicon? Was that a, no, that's not a buyout. Let's go take a look at this. The Rube, R-U-B-I. In fact, Reuben Hurricane Carter, I don't know if you've ever seen the movie The Hurricane, great movie, one of my favorite movies out there. I know he passed away a couple of weeks ago. And obviously one of the nicknames, the Rube out there. In any event, right now we've got RUBI. This thing was an IPO back on April the 2nd, so not that long ago. Had pretty wide price spread here of $17.12 at the low. $21.20 was the high. Made a slightly higher high out here on April 23rd. Got up to $23.20 and then gave back half of the market. Pretty tough to figure out how to call this stock. Went all the way down to $11.15 out here. So not enough information to do any kind of a technical analysis for you on this one. It is a coin toss. Let's go check out Western Digital. No coin toss there. There's plenty of information for us to look at. WDC is the ticker symbol. Hard drive company. Let's go see what it is doing here. Let's pull this back. Let's go start with a clean chart out here. Why don't we give it a clean bill of health? Now, remember, very first thing that any of us should do on any stock chart, when you open it up, very first thing you do is where your eyes should be focused on is what? on the volume bars out here. Now, in the case of Western Digital, the largest volume bar that we have on it takes us all the way back down to a low from November the 1st, 2013. That low is $68.14. You can put a line across the bottom, the top. It really doesn't matter. Price is not down there right now. What we then want to do is take a look and see if that low, in this case here it's a low, whether or not it's been tested. If it hasn't been tested, which in this case it hasn't, because on the very next trading session, we saw a slight gap up. So nice, strong move. In fact, Western Digital managed to go from $68.14 all the way up to a high of $95 even, Stephen. How about that? A round number high, one of Basil's round number highs out there. That made a high, all right, because we've seen an A to B equals CD to the downside that it is formed. That A to B equals CD pattern, if we start from the $95 round number high, that was from April the 4th. That's our A point. Our B point is going to be the first retracement down to April the 11th. That's at $87.26 at 20 cents. And then it makes a retracement up into a little doji on April the 22nd. Gets up to $92.75. The 1-to-1 A to B equals CD price projection, $84.95. It was hit with what? A wide-ranging bar. In fact, went to the 1 to 1.272 level out there. That always tells you that there should be lower price coming. Now, what Western Digital was also doing, so I'm going to go ahead and remove that A to B equals CD pattern. It was also coming down to what? Remember I said when you start taking a look at targets for prices out here, your eyes should automatically gravitate to what? To swing points. And if we go ahead and we use a red line and draw that across, that swing point here happened to be March 12th. That low is $82.42. That's exactly, in essence, where price moved down to, tested. Yeah, it got just slightly below that area. Now it's moving down there with what? With volume. 5 million shares were going against a swing point that had 1.3 million shares. Yeah, that's pretty good volume, as well as a swing point with 2 million shares out here. So what we'd have to say thus far this morning is this. It's a nice wide price spread, gapping up, volume behind it, 266,000 shares. It ought to run into resistance. Now, that resistance, the first level, the first supply line out here, should be this high of 85.91. The reason why I say that is because Western Digital, at this moment, clearly it does not look like the work to the downside is over. With one potential exception, that low that came in on May 1st, that $81.22 area, that low was tested. And it was tested with 3 million shares. That low was rejected out here. And so, unlike the prior low that we looked at, which had not been tested, that's all the way back here at the November 1st area. So, real key level for support for Western Digital hold is going to be that where I'm going to say it's really more going to be holding the low of $81.22. If it's unable to do that, what Western Digital is likely to do is go all the way back down to that $68 range. So that's what's going on inside Western Digital, and that is one of the movers and shakers in the markets as we speak right now. Let's go check out Fossil Group. That one here is gapping down. Oh, I imagine it gapped down. $9.25 is where it's trading lower this morning, 8% out here. FOSL is the ticker symbol. Yeah, it gapped down for sure. It's got some volume behind its move out here. Looks like we've looked at Fossil a few times. Let's go ahead and just simply delete everything on the chart out here. And if we take a look at Fossil, you can see your eyes gravitate to what? My eyes gravitate right to this big, huge downdraft that occurred back on May the 8th. Big volume to the downside down there. There was 20 million shares. Now, what I'm going to do here, prices above that level, I'm just going to use the top of that as an initial target line. So we'll just simply draw a line across there, a little black line across there. What else do we know about Fossil? We know that's got a B point of a to B equals CD to the downside here. And that B point is a swing from May the 3rd. And that low is at 106.91. So what we're going to do is we're going to go ahead and I'm going to draw a line across that. We'll use a red line there. I'm going to do the same thing on the volume bar out here. So let's go take a look at the volume bar. Let's take a look at it. We're going to draw a line across that. There we go. And we're going to use that line to what? To confirm whether we've got a confirmed A to B equals CD to the downside. The volume there on that February 3rd level, 1.3 million shares. Now, as price came down here recently and closed below it, only 572,000 shares. That was on April 28th. Not enough to really bust through that area, right? However, today looks like a whole different story. It's busting through it with volume because already 822,000 shares, and what we're looking at is only 13 minutes into the trading session. So what we have here in the case of Fossil is now a confirmed A to B equals CD to the downside. And that A point is going to be the high out here of November 6th. That's at 134.99. Your B point's going to be the low from that February 3rd candle. Retracement, nice retracement. Not too bad. Even had a nice little sign of strength out there. That looks to have been an exhaustion, little failure. That's the February 12th high, $125 even Steven out there. 1 to 1 A to B equals CD takes us to where? 96.96. Now where we're starting to get to that black line, that volume line out there. It looks like more likely to me what Fossil wants to do, probably get down into the 89.24 to 79.51 area. Right now, it is trading out at 101.87. So blowing away a B point with volume as we speak right now. That is Fossil leading the charge to the downside. Let's go take a look. But we've got a couple here to really take a look at that are leading the charge here to the downside dollar-wise. Next one up on our list, that's going to be Enzymodic, E-N-Z-Y. Well, I got to just put it in here. ENZY is the ticker symbol. This too down with volume. Now this one here doesn't really provide much of an opportunity to short. Fossil may, you want to take a look at shorting stocks that are $100 or more out there. You do not want to be shorting stocks that are $14 because they got to go out of business for you to make $14. They just need to be bought out to move up $14, and that's not unlikely for a stock like this because we take a look at ENZY. It wasn't that long ago, December 16th, 2013, it was trading out at $35. Right now it's at $14. That's a 20-point move to the downside. This is an IPO. It's going all the way back to that IPO price and perhaps then some. That low was $14.25. You're at $14.95 right now. That was on September 27, 2013. Again, not a ton of data out here, enough data to really draw any kind of relevant chart out here, utilizing the tools that we're looking at as we speak right now. Let's go take a look at Hydrogenics. Hydrogenics, HYGS is the ticker symbol, HYGS. That is off 23% this morning. Boy, we've got some stocks here just absolutely getting crushed. Trading at 15.15. Here's a high volume bars, a couple high volume bars out here, all really priced around the same area, right around the range of 11.40 to 13.99. So we should expect that Hydrogenics Corp. What does Hydrogenics Corp actually do out here? Let me see what they do. We should expect price, though, to head back into that area, and perhaps even more than that, because this morning here it's taking out a B point, and it's doing it with volume. Its B point is April 15th's low, 17.54. Even a small A to B equals CD on this equity here takes it to a price level of 11.94 to 8.92, and I would suspect that is really where it's headed to, probably the 8.80s, probably all the way back to where this thing originally broke out, which was on May 24th. And that price point is about $8.07 out there. Hydrogenics Corp. Let's see what it is that they do. They manufacture hydrogen generation products based on water electrolysis technology and fuel cell products based on proton exchange membrane technology. Nonetheless, they are struggling as we speak. Let's take a look at what else? What do you have out here that is moving that's worthwhile to take a look at? Let's see, percentage-wise. How about this one here? Delek U.S. Holdings, trading out at $30. It's down 5% right now. Not a stock chart that I recall ever looking at. DK is the ticker symbol, not to be confused with BK, Burger King out here, or the other bad BK, bankruptcy. If we take a look at DK, trade out at $30.49. Let's go see where this is headed to. Let's look for some high volume out here. High volume bars that it is dealing with. So the first one that's going to deal with is this nice little hammer candle that formed right here. So this is going to be an important low for it to be paying attention to. Now, in this equity, as we take a look at it, formed a nice high volume low back on March 31st. This is a recent high volume low. We can go back further left on the chart and we can find some additional lows out there. But it formed a nice little hammer candle that was tested. That was with 2 million shares, the low of which was 27.87. That was tested with 1.1 million shares. That hammer held, and then price moved up. In fact, it made an A to B equals CD to the upside. We take a look at that pattern. That looks just like this. It made a little bit more than a 1-to-1 A to B equals CD to the upside. Now it looks like what this is going to do is come all the way back down and test that hammer candle as well. And that is where it looks like it's headed to, about $27.87 out here. It's taking out the most recent swing point, which was from May 9th out there, $30.58, 914,000 contracts or shares traded place that day, already at 157,000 contracts with 18 minutes into the session. So it looks like that's going to go test that hammer candle out there. Let's go take a look at the currency market. Let's see what we have going on inside the currency pairs. Let's go back, take a look at the euro-US dollar. We looked at that yesterday. As we take a look at the euro-US dollar, this is the weekly chart out here. It is now clearly below the trend line. Looks like it's going to come, and the trend line here is a descending trend line, big trend line, important trend that the euro tried to break through. It did break through, but at this stage here, it's now given back those gains. That's the trend line coming off July 18th. Let's take a look at a daily chart. Let's go see if we can find a pattern here on a daily chart. A to B, anything that we got here. A to B equals CD to the downside. Absolutely nothing. What we can also see on the daily chart, though, is price having broken through a nice little rising price channel that it was in. That's coming all the way back to the lows in July of 2012. So where is the euro headed to? It's going to head to the this red diagonal line out here, probably the 1.361-ish type of level. Right now, the Dow's off 52, S&P is down 5, Composite down 12. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is off 52 points right now. S&P is down 4. NASDAQ's off 9. Russell 2000, the leader in the clubhouse, on the way down off 0.6%. Let's go check in on the IWM out here. Let's go see what we've got going on as we speak right now. So the IWM here, trading out at $110.72 out here. So the IWM showing really that same pattern that we were looking at inside of the Russell 2000 futures. That same pattern being coming from the swing point high from March the 4th. That's at a price level of 120.58, all the way down to the low that was put in on Friday. That's on May 9th. That's out at 108.28. The dead cat bounce of 1.3, the 0.382 retracement, 112.98. That number was hit almost to the T. Got up to 113.04. You got to love that. Within 6 pennies on a $113 instrument out there. So it makes the dead cat bounce. Now it's pulling back. I mentioned the 0.61. When we took a look at the Russell 2000 futures, that number inside of the Russell is 110.10. The number that it hit so far this morning, the low, 110.29 out here. That is now come back into this breakout here. So it's a little bit of a gap. And this, the Russell, is where we're going to get some real information from. You know, really, we want to be paying attention to what's going on inside the weak hands out here. So as we speak right now, really there'd be 2 lines inside the IWM that I would be focused on. Support 1 and potential support 2 out here. In fact, let me get rid of the Fibonacci numbers just to clean up the chart just a tad for us. There we go. So we'll clean it up. So the black lines out here, really support 1 and support 2. The key today is going to be inside the Russell is what happens from a volume standpoint. Is Russell pulling back with less than 76 million shares? Does it test the low of 110.51 and reject it? Could it also test the high of 110.06? That's the high of May 9th, and reject that. That's got 48 million shares. So there's 2 benchmarks out there. Now, what have we done inside the Russell here today? 8.5 million shares. That's not off to a good start considering we've been trading for 26 minutes. You'd like to see lighter volume out here. If the Russell moves and it closes inside the swing point 110.06 out there, it does with more than 49 million shares out there. Again, remember benchmarks, we got either 49 or this 76. But no matter what, if it closes inside the May 9th area with more than 49 million shares, it says it's going to go test those lows again, or should go test those lows again. And that's at the 108.28 type range out here. So it's from the Russell 2000 that we will probably learn the most amount of information. So mark that on your chart so you know what to look for at the end of the day. And that means that if this area of support holds, and it is with lighter volume, well, then that could be setting up an A to a B of an A to B equals CD to the upside inside the IWM. That could take it somewhere into the, right into the top of its descending price channel, right around the 115 range, 114.84 or so out here. So that is what's going on inside the IWM. If we go take a look at the VIX index, let's go take a look at one of our liquidity gauges out here. The VIX right now trading out at 12.24, 50-day exponential moving average. That is priced out this morning at 13.92. Still suggests that we've got a bunch of liquidity in the market. Not exactly the same signal we're getting here from our second liquidity gauge and that is the Euro-Japanese yen. That continues to move lower. The Euro-Japanese yen here has broken through a couple bearish patterns. Looks like it wants to trade down to about the 137.37 to 137.83 area. And that alone could put some pressure on the market. So, folks, it is Wonderful Wednesday. Hey, if you haven't had a chance here, go over to the homepage at TFNN.com. Click on my name, Steve Rhodes. Go check out Mastering Probability. As you know, we've been long and strong. We went and took profits this morning in that long and strong position that we were in. Folks, have a wonderful Wednesday. We'll see you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.